Hey guys, Heather here to talk to you about credit scores. And right now what you're looking at is my Discover account. Discover gives you your credit score for free each month. And as you can see here, this is my credit score since November of last year. And it has stayed in a pretty good range as far as considering my age and the number of accounts that I have open. It is in the good or very dependable range, and so that's not too bad for my age. It's really not too bad for anybody. Obviously, I would like it to be higher. Everyone wants an 800 credit score, but at this point in my life, it is not bad at all. But that being said, a lot of people will say, won't travel hacking and opening credit cards hurt my credit score? Won't closing credit cards hurt my credit score? And so I just wanted to address some of the concerns about that. In my opinion, travel hacking actually helps your credit score, and I will show you why. I also have myfico.com opened up here, and they have this really handy dandy, I would call it a pie chart, although it's technically not a pie chart, but this handy dandy chart that will tell you what affects your credit. And so let's start here with a 10%. New credit only affects your credit score by 10%. So depending on how long you've had your credit line open, that may negatively ding you, but it's only 10%, which is not much, as well as it falls off pretty quickly. I'm not sure the number as far as how long it takes, but it's only like a month or two. It's not too bad. I know that to be the case. Length of credit history. Your average age of accounts is dinged when you open a lot of accounts in a short amount of time. So let's say that you have a card that's been open for 3 years, and then you open another card. So that means you have 2 cards open. So one's been open for 3 years and the other one's just open. So you have basically 0 and 3. So you add 0 plus 3 together. That's 3. Divide it by 2 because that's the number of cards you have. So your average age of accounts is a year and a half. Now obviously one card's been open for 3 years, the other one just opened, but still your average age of your credit being opened is a year and a half. So as you can see, the longer you have cards open, the better it is for your credit score, but the more cards you open in a shorter amount of time initially hurts your credit. But if you keep them open, I'm a big fan of keeping no annual fee cards open for long periods of time. That helps your credit score. I have several cards that have annual fees on them, and some of them I have downgraded to no annual fee cards, so I can just throw them in a drawer somewhere and let them keep helping my credit score without me having to pay for them each year. And I would encourage you to do the same thing. Next thing we have here is 10% of your credit score is credit mix. This is one of the things that you can't really help that much, I would say. What they're talking about here is not all of your credit lines are credit cards. So you have some student loans, car loans, mortgages. Being that it's only 10% of your credit score, it's not really smart to go get a loan just to try to help your credit score. That doesn't actually benefit you in the long term. So I would just recommend doing the next thing, which is payment history. 35% of your credit score is payment history. Paying your credit cards on time is very important. It really helps your credit score, and it's just super smart to pay them off every month. And as you can see with the next number that we have, 30% of your credit score is amounts owed, that is saying how much money your credit cards are willing to loan you. So example would be $1,000 credit line. If you have $1,000 of your credit line and you're using $100 of it, that is considered using 10% of your credit line. You don't want to be maxing out your credit line because that's also very bad for your credit score. It's also why it's a good idea to have larger credit lines. I know a lot of people don't like having $20,000, $30,000 credit lines, but at the same time, it does really help out your credit score. So if you're going to close a credit card, I would advise you, if you have another card with that bank, to transfer over as much of that credit line to an existing card as possible. And if you're going to close a credit card, you can do that, but if you can avoid it, then I would download it or downgrade it to a no annual fee card. I will tell you though, closing a card does not impact your credit score in the short term. Technically, it hurts it in the long run because that account will stay on your credit history for 10 years. So let's say I open a card today and close it today. It will still be on my account for 10 years no matter what. So it won't hurt my credit until 10 years from now, which is good because that gives me time to get another card or continue using the cards that I do have to continue building up my credit score and keeping that score nice and high so I can continue to be approved for cards and keep traveling.